Hey there, I'm Pete Townsend, and this is Money Never Sleeps. We look inside the minds of entrepreneurs and at the crossover of startups, enterprise, finance, technology, and life as we know it. In this episode, Owen Fitzgerald and I look at the outsized gender gap in Web3. We then riff on the realities of venture capital dry powder and crypto VCs. Before stepping through what's wrong with Revolut's neo-profitability, an unfortunate slip switch for Railzer, and WhatsApp B2B payments in Brazil as a WeChat-like foundation. All right here on Money Never Sleeps. Owen Fitzgerald, how are you?
Pete Townsend, I'm good. Do you know, well, I'm good and I'm not good because I still have a cold. I still have I've had it since the last time we were on, which was weeks ago. So I'm fed up with this.
Still
stuff now.
The man flu.
Still the man flu, yeah. Don't even get any sympathy in my own house. So.
No, neither do I.
Yeah.
Neither do I.
But no, I'm good. You know what? I'm busy working on some really cool projects, one of which you've been having a look at for me, which is cool. So it's always exciting. And doing a lot of work on positioning, which is cool. Which I enjoy doing, and messaging more broadly for the new team, and how we work with early stage, deep tech, venture scientists, you name it, all these words I'm trialing out in order to position what we do here. Really early stage, research-led projects, cool stuff, changing the world kind of stuff. So really enjoying that because it's, it's kind of, we're obviously working with these projects, but at the same time we need to do a lot more around positioning what we do ourselves. So I like doing that sort of stuff. So yeah, it's all good.
Yeah, it's interesting when you jump into a new field, and I forget which investor that I was reading about who was talking about, this was actually Mike Dudas, who is an investor, and he was talking about investing in a new field that he had never worked in before. But it was a field that he was particularly passionate about as an observer. Yeah. And that because he had that passionate observation of that field, he felt like he had some really good insights on what good looked like.
Yeah.
And so with you going into now this deep tech mode, right, it's cool to see what's coming from that.
Oh, absolutely. Like it's interesting in a sense that I'm looking at a couple of kind of fintech projects and analytics projects, but there's some that I'll never have looked at before, mechanical engineering stuff and stuff. So that's interesting. But to me, it's like the bigger picture. It's, for example, I came across this stat the other day, and I was trying to position ourselves, Enterprise Ireland, in the context, but like we're the 5th most active deep tech investor in Europe for last year based on a number of deals, but yet you don't see that anywhere. You don't know that information. I had to kind of dig around and find that, but I'm like, that's really impressive.
It is.
We're putting a lot of money behind a lot of really exciting projects, and what's the downside? We're furthering research. Worst case, they don't turn into a startup. Maybe only 1 in 3 does, but at the same time, we're building on the fountain of research in the system by funding these things. So it's pretty cool.
Yeah, it is. And it's, going the deep tech angle, I like it a lot for Ireland because of, I think the numbers pointed to, when I looked at this in 2020, 2021, 75% of the angel deals in Ireland, the angel investment deals, came from the life sciences.
Yeah.
Right. Now you can have deep tech that is life sciences, but I'm more interested in the deep tech that is actually the foundational element of driving things that could end up in Web3. So, deep data analytics, whether that is on a blockchain or not, is something, and AI and machine learning and all of these different categories of deep tech are things that I just get excited about.
And that's it. And traditionally we've been very strong in kind of medtech. We're one of the largest exporters of medtech to Europe. It's a 12 billion kind of export industry or whatever, something crazy. But you're right. I'm looking at it from a point of view of deep tech, on the ICT side. I want to do a huge amount more. Like, it's a very much a call to action for anyone who's listening. And hopefully over the next couple of weeks and months, you'll see a lot more publicly out about the kind of supports we have for deep tech to encourage more. But I'd love to see a lot more being done in AI, blockchain, crypto, digital assets. That's all there. It's an open door. I'm looking for stuff. So if anyone wants to come in and work in a university kind of setting, do some cool research, potentially turn it into something really interesting, then my door is always open.
Awesome. And there's a big crossover story for what you just said coming out of what I've been working on, but I can't say anything about it.
Not yet.
yet. But I will. And we'll have a good chat about it.
Yeah.
But listen, I wanted to dig into a topic that's important to me. And I saw this in Sifted just at the beginning of the week. And this was a analysis that was done by Aruni Sunil and Steph Bailey. And this was the 3rd of March in Sifted. And it's the Web3 gender gap by the numbers. And the piece starts out with, from founding teams to investors, women are underrepresented in European startups and tech. And Web3, which is this cluster of tech spanning VR, blockchain, cryptocurrency, I call it what you will. That's not my favorite definition, but I'm quoting the article here, which at its best promises to democratize finance and create inclusive spaces, isn't better, it's actually worse. So only 13% of Web3 founding teams include a woman, according to a new report by BCGX, which is related to Boston Consulting Group. Among founders, the gap is worse at 7%. Okay. So that is an area that we need to do some significant work on.
Yeah.
Now, I have, through Techstars, we have a big commitment to diversity, and that we need to do better in Web3. And I can clearly see, coming out of this process that I'm going through right now with Techstars, that Web3 is definitely overweighted towards men, in a big way. And we are being fastidious in trying to sort through all of this to do better. And it not only comes from application review, but it comes from the outreach to communities to actually spread the word and say, listen, we're doing this and we're running this Web3 accelerator, and we want to do it purposefully where we do have a more diverse cohort. And I don't even want to make any excuses, right? People will point to some demographic, some institutional, hey, this originated from crypto. And what rhymes with crypto? Bro, right? And we see crypto bros. But there were, and the opening statement that a lot of people have is, listen, this is a new field. We shouldn't have this overweighting of one gender over another. But in reality, we have. I'm just trying to think of what are some of the strands we can pull on to do better here with diversity in Web3.
Yeah. Look, it's a challenging one because actually, like as I mentioned earlier, we're doing a lot of work on stats on our side on the deep tech stuff. And it's interesting is that our deep tech portfolio has a higher weighting of women and female founders than our broader investment portfolio. And we don't even necessarily have the answer to why, but it's really interesting to see it. And it could be that it's heavily weighted towards the likes of life sciences, where a number of our really strong companies are female-led. It could be that. I don't actually have the answer, but it's strange. It's unusual to see it.
Yeah.
And I think you're right. Like it's crypto has been a traditionally male kind of dominated space, and gaming and sports media and stuff like that. So I suppose it would naturally expect that it would flow into kind of Web3. But like you said, it's a new area. It shouldn't be as heavily kind of favored. But then it kind of probably ties into the funding side of it as well, where you traditionally, female-led companies raise very little money and get a really small, 1% or 3% or something of the broader pie.
Yeah. The stat quoted in the article is that it's 4 times less money. And I think listening to you, I'm starting to pull this strand apart a little bit, in that that in general, VC deciding who gets funded and who doesn't get funded, VC itself has a massive gender gap.
Yeah.
Right. And like you said, if you look at Web3 and how that's being funded, that initially had been funded by the crypto-themed VCs. A lot of the crypto-themed VCs have come at it from a background of adrenaline-fueled trading, because they look at the opportunity as liquid venture, that if they're doing crypto VC, they can invest in tokens, and those tokens have a 12 to 24 month liquidity cycle rather than a 4 to 5 year liquidity cycle of equity-based VC investing, because the tokens, you can liquidate them earlier, right? And let's not even get into a token and what it represents in terms of utility versus it being a security. Don't want to go there today, but that's how it had been viewed. And a lot of those adrenaline-fueled, crypto-themed VCs came from options and derivatives traders and FX traders. And that had been heavily populated by men, right? So that's where it started, the investing, the VC investing in crypto, and then coming into the bigger umbrella of Web3. Now we see a lot of the Web2 investors have, in the last year or two, started looking more and more at Web3, perhaps even going much further back, like Union Square Ventures, who are one of the original investors in Coinbase. Okay. But that overlay, which would hopefully start to bring in more of a diverse element into the investment decision makings by VCs, still is general VC, which is overweighted towards men.
Yep.
And investors generally invest in people that remind them of themselves.
Yep. Pattern matching.
And there's this natural bias towards that. And one of the things that I always try to keep doing myself is to step away from that and say, yeah, I could have a great, wonderful conversation from someone who reminds me of myself, but can I invest in somebody that reminds me of myself?
Yeah.
Knowing myself, no, right? Whatever may come from that comes from that. But I think there is, so just to kind of summarize that, I think it's this, original male-fueled VC track into crypto that became this general umbrella of Web3. And that was definitely overweighted towards men and men making investment decisions to invest in men. And then on top of that, you've got the general VC industry that we know we need to do better in, and that a lot of great strides are happening there, but it still needs to get better. And that is starting to fill the gap, but it's a long way to go before we actually get to say 20, 30, 40, 50% male-female ratio of Web3 founders.
And I think as well, like if you look at what's happening in broader industries and stuff, a lot of the change is led by industry bodies or government agencies where you can intervene. You can, make it a law or whatever, a regulation that you have to have a certain board representation female. You have to have a certain level of senior management female. That sort of thing. In order to bring the numbers up and level the playing field, you can intervene, or the state can intervene, for example. There's no mechanism like that in the private sector. There's no way to force a VC to up its numbers.
Yeah. You can't.
You can't. And obviously you can't then it's even less likely to have any sort of intervention in Web3. So you will hopefully see these things filter in if we're talking about that kind of cycle that you're going from, like, the trading and the male-dominated into more male-dominated spaces. You'd hope that, changes that'll happen will eventually filter in. It's just they're going to be very slow.
Yep. And where you can do it is in performance management and incentivization, right? So put in a ratio that says at least 30%, let's start there, of your investment portfolio needs to be female founder. If you're going to build a portfolio of 30 startups, at least 10 of those need to be female founders.
And the unfortunate thing then is like that you're looking at a space there's a very low representation. Mm-hmm. So you're potentially giving a poorer opportunity the chance to meet a need, to meet a requirement.
Yep.
And then that begs the question, well, is that the right way to do it? Well, it might be the only way to do it. In order to make things better, you might just have to say it has to be certain level of representation. There has to be, like that, some consequence, because it'll be a self-fulfilling then. It'll lead to more the next time.
I know. And I think, it's hard to put in those quotas across the board. It needs to be an organization by organization decision. Techstars have committed to that. But I think the best way to do it, it's almost one by one. Yeah, right? Yeah. And how do you actually teach people that are making investment decisions at the startup level to be aware of subconscious bias, right? Some are making decisions based upon a set of ideals that probably are outdated, but I hope that is in the minority. Yeah. Some are making decisions not knowing they're making decisions, or not knowing that they're actually biased. Yep. And I think it's just this self-awareness, and self-awareness is damn good when you're an investor. So, but I think that there's a ways to go with this, and I don't know, you can only change society 1 year at a time.
Yep.
Is that the way to do it? But just, being purposeful about it, talking about it like we are right now, and hopefully just getting people to think more about it, getting men to think more about how they're making their investment decisions as VCs.
Yep.
That's all we can do, Now, or some firms being progressive and saying, we're actually going to put this into how we reward people, right? And so I think there's a combination of both. I'm not going to preach on it to firms because firms need to make their own decisions, but I can preach and say, well, we need to do this at the individual level. Yeah. So bottom up as well as top down. We can talk about the bottom up. Firms need to decide themselves on the top down and what's right for them.
Yep, 100%.
Cool. Good. Glad we got to talk through that. On that same note, we have an interesting take from the block on crypto startups, and be wearing if that's even a word, but crypto startups beware of the dry powder fallacy, right? Which is saying that I think the 50% of the big crypto funds, the big Web3 funds out there, have actually deployed their capital. And this was, like I said, this was in the block on the 6th of March, where investors raised nearly 100 billion for crypto funds last year, and several top-tier firms have deployed less than 50% of their multi-million or billion-dollar Web3 funds. But the warning is this abundance of dry powder isn't necessarily a cause for celebration. Veteran venture investors warn founders of the dry powder fallacy. Good article, but it missed a critical freaking point. Okay? There's structural reasons why you don't deploy your entire fund. It's called the reserve, right?
Yeah.
Where you go and invest. If you raise $100 million fund, you're going to invest because how much comes right off the top? Is it 10 million? 20 million comes right off the top in fees, right? In the management fees every year, because it's 2 million a year in management fees on 100 million commitment, 10 years of that fund life cycle.
Yep.
So 20 million. So you're only investing 80 million to begin with, right?
Of which you want to keep half of it, at least half of it.
Exactly.
To follow on. Yeah.
So 40% gets deployed in the first 3 to 4 years. And you're doing that with your initial deals. And then the following couple of years, by year 5, year 6, you're probably fully invested at that point. And you've made decisions on doubling down on which ones you're going to take a bigger bet on. So if you write a check for 500K or say $1 million in somebody's seed round, and then you're going to go in their A round, you may invest, another 3 or 4 million, right? But you're only going to do that selectively. If you've made 30 decisions about who to invest in a portfolio of $100 million, the size, then you'll probably only double down on 10 of them, right? So 10 times 3 million, that's your other 30 million, and with a bit of spare change in there, and you're at 80 million, right? So that is one of the big things in venture that, so this article didn't address dry powder at all whatsoever. But one of the other things...
It's really important that founders understand, and a lot of them don't, because it's surprising how quickly a fund is invested, depending on the size that they have. But like you might see 6 announcements or whatever, and all of a sudden that could be their fund deployed, depending on their size. And they're keeping the rest in reserve for follow-on. But also just, what generally tends to happen, or I tend to come across, is that they don't understand the mechanics of, again, how a fund works and what the expectation is, or what the agenda is for the VC. And often then you're having the wrong conversation, or you're trying to position yourself in something that would either never fit or doesn't fit. They're never thinking of at what point in the cycle, in the fund cycle, am I talking to them at? I'm talking to them in year 4 with their last check, and they're going to want a return from me in 5 years' time, not in 10 years' time, But generally, founders aren't thinking of that or aware of it necessarily. It's not a question that they would ask a fund as they're working with them. No, and they need to. I've been teaching this investor pipeline course with content courtesy of Jenny Fielding, who was ex-Techstars New York City MD going back a few years. And she did this great masterclass on how to build your investor pipeline. And it's all about the critical research you need to do at the beginning to identify investors who will invest in your business, right? And it can't just be a scattershot out to, oh, hey, this one announced they're raising a fund. Of course they're going to love me, right? There's so much that goes into creating that list, curating that list, researching it. And your researching is equivalent to, think of the craziest salesperson you've ever met and how much they know their targets and how well they know their targets on who they want to sell to. You need to do the same thing when you're raising money. I got an investor pipeline email or like spreadsheet from one company I'm working with, and it was somewhat embarrassing when I opened it up and looked at the funds on it. I was like, oh God. Yeah. I know. And people need to know this stuff. And I can sit here from my perch and say founders need to do better research, right? But you need to know where they're starting from and what position is that founder starting from. Yeah. I did a class yesterday online, and one of the founders asked me, why are you using the term pipeline? That usually is equated with, a customer. And I explained to him what I just said about you need to look at this in the exact same way.
That founder is starting from a position of never having raised capital before, has been entirely technical in their time to this point, and just hadn't ever been exposed to fundraising and what the basics of that were. So everyone's starting at this from a very different position.
Yep.
So it's, how do we get in at the base level and, teach founders how to do this? Well, that's what, hopefully I exist for. But it's, when I see founders that get it wrong to begin with, it's not how they got it. It's not that the fact that they got it wrong, it's how quickly they can make it right.
Yeah.
And if they turn it around within a few days, they're like, oh, actually, yeah, I listened to you. I went and spent 10 hours on this. I'm like, good. And show me the next version. Then we're in business, right? So but it's a big area that you just cannot take for granted, that founders know where to start.
It's a relationship. It's essentially a 10-year relationship.
Yeah.
There's so many things you need to know going into it.
Yep.
I often see like people, I'm talking to this group, or I'm talking to this group of angels or whatever. And I'm like, okay, but is it money or like smart money? Is there going to be any value add from these angels at all? Surely you could be looking at a specific VC who only invests in e-commerce, for example, at an early stage, as opposed to a group of angels who will give you the money but can't necessarily add anything else to it.
And one of the big eye openers for me as well was, just talking to a number of VCs a few years ago and figuring out that, the mindset is, you build a portfolio of 30 startup investments, you're making that investment decision on the basis that every single one of them will be 100x return, right? Say you're writing a 500K check, you want that startup to return 50 million. And when I say return 50 million, how does that going to happen? Say that 500K check gets diluted down to a 5% equity stake over the years, or say even a 1% equity stake over the years. How are you going to get 50 million back out of a 1% stake? You need that startup to have an exit of 5 billion.
Yeah.
Right?
I think so. I haven't got my calculator. I was looking at you doing the numbers.
Doing the numbers in my head. No. And just, I can go back and cut this out and change it, but just to work through the math. So if you start out with a 5% holding based upon 500K, you end up getting diluted down through the rounds to 1%. Yeah. And there is an exit of 5 billion. 10% of 5 billion is 500 million. 1% of 5 billion is 50 million.
Yep.
So 50 million on a 500K check is a 100x return.
Yep. But
in order to get that 100x return, you need that to be a 5 billion exit, which is generally not going to be an IPO. It will be a trade sale. It will be an M&A deal at 5 billion, because you probably wouldn't go to IPO with a valuation of 5 billion. Some do, but it's going to be, So this harks back to episode 68, after I read that blog from Finn Murphy, who was with Frontline Ventures at the time. And I kind of stepped through this at the same time that I was learning a lot about the space. Yep. So it's amazing how this comes full circle. But moving on. So Revolut, one of our favorite topics.
Yep.
They had their news come out in the last week or so.
To great fanfare.
Yes, to great fanfare, that they are now profitable.
Yep.
But as always the case with Revolut,
as always the case,
as reported by Reuters on the 1st of March, Revolut auditor flags concern about 506 million of revenue in long delayed 2021 accounts.
Only 75%.
Right? Yeah, only 75%. So they can't actually account for it. And the funniest statement in this whole article was something, I think the CFO of Revolut saying that, well, they said the balance sheet was complete, so logically it follows that our revenue is accurate. I'm like, oh my God. But they wrote a qualified opinion that they couldn't actually confirm because of how pieced together their systems were of revenue recognition to be able to say, yeah, this revenue it is actually correct. Yep. So
it was bizarre. I mean, they were getting criticized left, right, and center for being delayed with the accounts. And then they come out and you're like, oh, great. And then like a few days later, you're like, oh, what is going on over there? Like, because I used to work in a large, I won't name, international bank, and I was working on a product side. And I was found it bizarre. I was like, how do we track the P&L and how can we stand over the numbers? Because we had like 350 different IT systems that were patched together from years of M&A and stuff like that. And I'm like, could we really say with certainty that, we're right on these numbers and these product lines and the revenue? But that's like a big, huge international bank with multiple operations in multiple countries, and again, loads of different systems. You expect that a Revolut and a lot of the other challengers are internet only. They're built and designed in a particular way. These things should all be fairly up to speed and working quite accurately, you would think.
Yep, I know, but it's really hard to do. I mean, I had my experience with them, which I thought about that when I read this article, and I totally I get it that they are a tech company trying to be a bank, and what you don't have is this strategic business and technology voice at the top that is saying, okay, combined with some chief operating officer risk mindedness saying, all right, we need a full enterprise system here that is governing everything we do, right? And people bring in big platforms like to do all this, and Revolut are like, we don't need that. We built our own technology. We're tech guys. Forget about it, right? And they just don't yet have the internal control foundation, and that's come out across so many different news stories that would point to them actually being able to control their daily revenue, at a 30 billion valuation neobank, which I think is not good, but I understand the context of it and knowing how the decisions are made, or not knowing how the decisions are made. But I got to be careful because the founder that I'm close with claims to be friends with Nick Storansky. So
yeah, we don't want to piss them off. We'd like to get him on the
show. No, exactly.
No, do you know what I thought? What was important probably to flag was that it was saying that a lot of the revenue related to what I suppose you would call, additional services. Like it was crypto and it was subscriptions and foreign exchange. So all of the additional kind of products and features that they kind of rolled out or bolted on seem to be the ones that aren't tracked as well.
Yeah.
As opposed to the core kind of payments and whatever else they had at the core of the business. So, if I was to be nice, I'd say that that's possibly part of it, is that they rolled out different features not available in every market sort of thing, and they probably aren't as well integrated as everything else.
Yeah, I see that, and I was with a group of people last night that got together specifically for the purposes of bringing together this certain industry group that I'm part of in Ireland, and there was chatter about this topic of Revolut's revenue, and I asked someone who had been at Revolut, and what's it going to take for people to fully trust Revolut? Because I don't. And, I feel like, from going through all of this with you over the years, Owen, and just I've developed this opinion where I wouldn't close my Bank of Ireland account and have my entire banking relationship with Revolut. I would not do that. Even to how much that I can't stand the Bank of Ireland app. I need it from a bank trust.
Yep.
I don't know, safety mentality perspective, because I do not trust Revolut. I do trust Bank of Ireland. I don't like their tech, but I trust them as a bank. So, but that's the mentality of someone turning 50 this year. Okay. What one of the folks said was that their daughter just got a job, and, in her first job, all she had ever had was a Revolut account. But in order for her employer to pay her, they needed her to have a bank account with an Irish IBAN.
Yeah.
So she had to go open up a traditional bank account in Ireland or to get paid from this employer with her first job, because they wouldn't pay her. And the second she gets paid, it goes boom, right into Revolut. Yeah. Revolut are coming with Irish IBANs. That is happening. I said, what is it going to take for people to trust them? And they said branches. I'm like, really? Do we need branches? Do we need a place for people to go into to ask them questions? And I just wasn't aligning with that, but do branches then equate with building trust? I don't know.
Do you know what? I think it's an element of there's a security to knowing that there's a place I could go to if I had a problem to ask someone.
Yeah.
Like, I know the amount of times I've rang even permanent TSB and you're on the phone for 40 minutes waiting to talk to someone, but at least you'll eventually talk to someone. They probably won't fix it. Whereas there was one time I was trying to get a refund on something through Revolut, and like I'm talking to the AI chatbot and it's not giving me the answer. I'm like, no, what do I do now?
You try to get them to put in a better chatbot.
Yeah.
That's all you can do. Mm-hmm. No, and it's hopeless. So I don't think there's an answer to that
Well,
question of,
the answer is to not constantly have negative news about your internal controls coming out.
but most people who use Revolut don't read this stuff like we do.
Yeah, that's true.
They don't know about it. And, the conclusion of the conversation last night was that the people who can't trust Revolut will just eventually die. That's it. I'm like, I hopefully have a few more years ahead of me.
Yeah,
but, and that society will change one year at a time, right? In order to get to this point where you're using this facility for your financial life, and that's it. You're using this app for your financial life, and whether it's a bank or not doesn't matter. And they are a bank, European licensed bank in Lithuania.
Yep.
And deposits, so I think, as we were talking about last night, deposits are covered. So, up to a certain amount, was it like 100K or something like that? So I was thinking in my head of this headline of neobanks and neo-profits, right? And that, a new kind of bank, a new kind of profit, right? And it's see what that is. I mean, because, Starling's profitability has been really helped along, I think, and will continue to be helped along.
Government
But
program, Yeah, we
by
looked
the
at that. It
government
accounted
program.
for almost all their profit. Or, their profit was like fairly low, but, there was 30 million or so worth of government money that they had made that brought them into profitability.
Yep. And their now newer profits I expect, will be coming from their Starling Engine, which is their banking as a service platform, right? So speaking of banking as a service, and embedded finance and the wonderful underbelly of fintech, the shiny underbelly of fintech most of the time, we have a little bit of trouble there with Railser, a lot of trouble with Railser, and that investors are on the brink of a deal to salvage parts of the payments group. So they've hit some difficulty. They had some Lithuanian regulator issues going back more recently. We had Nigel, the founder of Railser, on the show last year as they were going through kind of their next funding round and raising money, and we had a great chat with him. Hadn't seen any of the possibility of this coming out in the fact that they were having that much difficulty when we did have the chat, but now looking back, we can kind of understand, if you're doing that much of a down round, that obviously there's some things going on. But it looks like that this is probably going to be, well, should we say the end of the beginning for Railser, or the end of the whole story for Railser?
Yeah, it's a strange one. And it's strange in terms of, obviously, we only recently were talking to Nigel about it, and it's been a big, shiny kind of positive story in that particular subsector. But it's also strange just that, like, banking as a service seems to be getting pretty hammered a lot lately. We're only talking about Solaris there and their troubles in Germany. And it's an interesting one because, to me, it was like you were saying, the shiny new thing, and embedded finance. Like, there's a huge opportunity there. And you could see why it makes loads of sense, but actually it seems to be, being really closely looked at by regulators, and there seems to be a lot of issues with it, and it's almost killing that kind of any momentum in that particular space at the moment.
Yeah. And it's kind of, I think there's a couple of strands here. One is that, where we started with Wirecard a couple of years back, right? And that whole story. And that whole assertion that was made at the time of, are we regulating the financial part of this, or are we regulating the technology part of it? And so a lot more scrutiny went to go onto the tech part of it. Solaris does that together, where they obviously have a tech platform, but they have the regulated entity that they can then rent out, basically. I think, so more and more scrutiny being put on what is it exactly that you're enabling. And I was looking at somebody's deck in the last week that is doing something not related entirely to the space, but they're depending upon 4 other providers, right? That are all part of their value chain of what they deliver to their end customer. It's kind of a fintech crypto hybrid. And each one of those 4 pieces of kit, that technology they're dependent on, they actually do have regulatory requirements, to help meet KYC. So, it can be a minefield to walk into when you're in this space, and with a lot more regulator scrutiny on it now, it's even more so. I think
and it's the idea of being able to roll out a platform with lots of different features and products attached to it, and just seamlessly integrating it into your piece and building on top of it is great. But obviously, the more pieces you add to it, the more partners you add to it, obviously it increases the risk. And that seems to be where the challenge is, because then you're getting away with effectively providing products and services without the need to be regulated.
Yeah.
And I think that there just seems to be a view now that from regulators across Europe in particular, that it's just, no, we need to look at this more closely.
Yeah. I'm really curious to see what comes out of this, because the news items had gone from going into administration to then going into pre-pack administration, which is something a little bit different, to perhaps now what I'm guessing at is that perhaps separating the business out between the technology and some of the administrative businesses, and trying to realize some value out of that. But I'm not going to speculate.
There's bound to be something good there that someone will take. You'd have to imagine.
Yeah, absolutely. Absolutely. And it feels like from that chat with Nigel that, there's got to be something good there. So, because they built a pretty successful business initially off this, and then the world changed. COVID's introduced so many different just economic irregularities into all this. It's nuts.
Yeah. But then at the same time, I sent you over another article about a company called Griffin, which announced their UK banking as a service, or it's a UK banking as a service platform. It was in Finextra there this week, and they become a bank. And of course, my article now won't open for me to look at it. I can't give you any details.
Yeah, but no, I on that one, I thought it was important that they're doing this from the beginning, and that that you start. Like he says, David Jarvis, the CEO and co-founder of Griffin, said this moment has been years in the making. And it's, becoming a bank is testament to the determination of our team, who've been building a modern core banking system. And that will obviously enable us to deliver an exceptional banking platform for the UK fintech community. So build. And I love this. And I'm seeing this in some of the founders I work with, that it's like, you never see the headline that says, founding team quietly and determinedly build for 2 years before bringing a product to market. Right? You don't see that. You see the blow-ups, right? So, and seeing the discipline that founders have to live frugally instead of raising a whole bunch of money off what they will build, but building and then raising money smartly and doing it at better valuation, because you're giving up less of your equity and keeping more control. And just having that patience and diligence and determination to do this. And so we'll see what happens with Griffin, but I like that. I'm glad that you alerted me to that one. Moving right along, one of the last ones I wanted to cover was WhatsApp.
Yes.
Right? They got their Brazilian green light for business payments. So that was just on the 6th of March in Finextra. So there was this on again, off again between the regulators in Brazil and WhatsApp and Meta, obviously, and what they could and couldn't do on the payment side. But this is all moving in lockstep now.
We discussed this before, whereby the Brazilian Central Bank had initially approved WhatsApp to allow them to make in-app transfer money within the app for what is one of their largest markets. I think they've like 400 million customers or something. That sounds like a large number. It's a large number. I can't remember if that's the right number for Brazil, but it's a significant volume of...
168 million.
168. Sorry, it was... Yeah, because they were rolling out WhatsApp payments in Brazil and India, which are two of their biggest markets. So India must have been 400 million, But then the Brazilian regulator stopped or cancelled the approval kind of last minute. And then like a week later, the Brazilian banks and the regulator announced, I think it's called Pix, which is their own payment solution. And I remember thinking it was actually hilarious the way the whole thing kind of played out. But now they seem to have gotten past that, and they're able to start rolling out the kind of in-app payments, but also from a business point of view, which obviously increases the opportunity in the market there. So this is a really interesting one to see how this plays out, because it's their first market. They're going to roll it out to other markets. But when you consider markets like that, whereby a lot of transactions, a lot of activity would happen within the likes of WhatsApp and others, like you could see the opportunity considerable, especially now they're bringing in kind of a business offering to it.
Yeah, definitely. And I when I was looking at this, I saw the news a couple days ago. You pointed it out, and then I just went to Google and did WhatsApp Brazil, and the first news story that came up actually went back to 17th of November, which I hadn't seen, which was WhatsApp picks Brazil to launch its in-app business directory and shopping. Okay, so before they actually turned on the payments, because they just got approval, they put this directory in place so that you could find businesses near you, and you can actually start to see what on WhatsApp. Yeah. So this to me kind of harks back to the beginning of WeChat, where WeChat was just chat, right? Yeah. And then it became business, commercialized.
Yep.
And
All
then it
these other
became an
features,
ecosystem. And now it's a massive, huge commercial ecosystem. And if you look at the direction of travel that you go from a messaging app to becoming a commercial ecosystem, feels to me like more of a well-built progression
Yep.
or a well-buildable progression
Yep.
than starting out as a social network like Facebook and then trying to build a huge commercial ecosystem around that, because you already have this ad-based revenue model, which kind of complicates things, right? So
Yeah.
it's
very well, like you said, it's very well positioned and well built
Yep.
for Meta to
It
be
is.
doing, considering all their other attempts at other things. But they seem to be taking a really well thought out kind of role here.
And I love these concentrated efforts to do things right in countries where they've got a large component of the population that are using their app, because you get these network effects,
Yep.
right? And people telling people about it. And that one of the reasons Revolut's been so successful in Ireland has been, because, well, it's 2 million people out of 5 million people. And why they like to do new things here, because people tell each other about it. People say, oh, I got my new Revolut credit card, or I got my Revolut BNPL, or whatever. So that might be the last one we might be able to cover today. I know we had a few other stories to get into, but we're running short on time. There was, I think, a couple of the quick ones were just I'm not even going to mention them because I am out of time.
Yeah,
so
no, you're out of time in particular.
But maybe there are others that we can cover next week.
Yeah, sounds good.
Cool. Well, listen, thanks for doing this Whistle Stop tour with me today. Appreciate it.
Pleasure, as always.
And we'll talk to you soon.
Chat again soon. Take it
Adios.
easy.
That does it for this week, folks. You can learn more about the stories we covered in the show notes on our website, moneyneversleeps.ie. If you like what you heard, please leave us a rating or a review on Apple Podcasts or Spotify, as it helps others to find the show. Thanks to Conan Brophy from Create Sound for mixing and editing this episode. Conan is an excellent media man to get in touch with when you're thinking about launching your own podcast. As for me, I'm an early-stage startup investor focused on where fintech meets crypto and crypto meets Web3, and I lead the Techstars Web3 Accelerator. There are plenty of links in the show notes on moneyneversleeps.ie on how to get in touch with us, so don't hesitate to reach out. Finally, till next time, thanks for listening. See ya!
Money never sleeps, pal.